Deputy Owen Murphy.
And thank you to both the witnesses. Mr. Torpey, is it possible that loans or terms were offered to borrowers during your tenure that were outside the normal terms available at Ulster Bank?
Deputy, as far as I'm aware, there were no offers of loans to customers outside of normal terms and conditions. I did mention earlier that there will have been a staff scheme, which will have been a staff mortgage scheme, which is the only situation that I'm aware of that will have had in any form of preferential terms offered to any individuals or group of individuals.
We turn then to the group internal audit. That's at the Dublin Mortgage Centre from December 2006, and the reference is UBI Volume 2, page 74. So on the top of page 74, if you have it in front of you, control issue number 2. Mortgages are processed to completion without sufficient consideration being given to whether all terms and conditions and documentation requirements have been satisfied. Classification is significant. And if we go down to the third paragraph then, underneath that, the current process does not require or result in full copies of the mortgage offer letter being held on file, either in paper form or electronically. For switcher mortgages, remortgages, the current process does not require the seller to have sight of the signed offer letter at all. Can you comment on that? That's coming from the group internal audit in the Dublin Mortgage Centre.
The Dublin Mortgage Centre was established as a result of integration of mortgage systems in 2006. The middle of 2006, I think, is when it was established. It's not strictly in my remit, but I'll answer as best I can from my general knowledge of the situation. Following the establishment of that mortgage centre, weaknesses emerged. There was an internal audit requested, I believe by the Chief Executive, although I'm open to correction on that, and it did turn up very significant issues, which led to an immediate escalation of the concerns, and it did lead to an immediate bringing in of resource from RES Group, who as I've stressed earlier, take these things very seriously, to remediate the issues as quickly as possible, because I would, that an audit report such as this does not make good reading. I don't offer it as an excuse that it had just been newly set up. I think the only good thing that can be said about an audit report like this was that it was undertaken quickly after the establishment of the Dublin Mortgage Centre to establish the weaknesses, and so that they could be escalated, addressed, and put to rights.
But am I correct in understanding that what this says is that people were giving out mortgages, and it's possible that these did not meet the proper terms of the bank, and it's possible that you did not know if they did not meet the proper terms of the bank?
The implication of what is in here is that some of the conditions attaching to the issuing of a mortgage may or may not have been met prior to drawdown. I think, Deputy, that's somewhat different to any implication that there would be offered, that there would be mortgages going out on preferential terms. I think, as I read it here, Deputy, and again I'm talking from a general knowledge rather than a detailed knowledge of the Dublin Mortgage Centre, it seems to me that we're looking here at a serious deficiency in process, where the various items that had to be delivered prior to drawdown weren't necessarily, or at least there wasn't evidence that they had been delivered prior to drawdown. That is a weakness, not an acceptable weakness, and management will have taken that very seriously. And I have sufficient recollection to know that, as I've said, that a senior resource from the RES group was brought in to quickly and thoroughly remediate these weaknesses.
You see it as a weakness in process?
That is very much my reading of that.
Well, if I could turn then to UBI B1 Volume 1. Page 22. And this is about the corporate hospitality and gifts to staff at the bank from clients. You didn't maintain a register of any corporate hospitality or entertainment or any gifts received by staff in excess of €250, and it wasn't policy to do so either. Why not?
The practice at the time, Deputy, was to rely on a code of conduct which required people to act in a certain way. in that context, and I believe the situation has changed since. I'm no longer with Ulster Bank, but the practice at the time would have been to rely on codes of conduct where people understood and were held accountable for their behaviour in accordance with the code of conduct, including matters of hospitality.
Could there have been a relationship between this lack of a policy and lack of a register and what Group Internal Audit found in the Dublin Mortgage Centre?
Again, Deputy, I think I believe, from my reading of the documents and from my recollection of events, I believe we're looking in Dublin Mortgage Centre entirely at a process failure, process weakness, and as such, I don't see any connection between these two items.
Okay, thank you. If we could turn then to B2, Volume 1, page 28. This is a letter from the Financial Regulator from March 2008. On page 28, at the bottom of page 28, they highlight that inspectors noted from the minutes of the RBS Group Credit Committee held on the 14th of May 2007 that in relation to a 90 million facility being discussed for, and it's redacted, the relationship team said that they did not know exactly what the 70 million equity release would be used for, but they were aware that, and it's redacted, had tendered for 2 significant projects. Is that an example of staff at the bank lending out 70 million to a customer not knowing what it's for?
Deputy, I don't believe so. I believe what we see here is that a credit committee challenged appropriately to gain an understanding, and will refer that back prior to sanctioning any credit. Again, I won't have been part of the credit process, but I think I'm making a reasonable inference from the information in the document.
Thank you, Chair. So my final question on this area is the Group Risk Credit Policy and Strategy Committee. You didn't serve on that committee.
I did not serve on that committee, Deputy.
As Finance Director, should you not have served on that committee?
I think this goes, Deputy, to the core of the organisational structure, which I've sought to bring out in my opening statement, where RBS Group operated very much on functional lines in its organisation. It was an integrated group under the UK Prudential Sourcebook rules, the UK regulatory rules, such that the control was from the centre of RBS, and that caused people like me to be in a functional line, very much in the accounting line, with a credit process driven through the credit process lines in RBS Group. So I think in the context of the international group that RBS was, and of which Ulster Bank was a subsidiary, it was not unusual that I would not have been part of that process.
Okay, thank you. I have to move on now just to another question while I still have time. And the book is UBI B2, page 21. Please. So you have some tables in front of you. By mid-2006, the level of new mortgage lending in Ulster Bank outside of policy reached 40%, and policy changed later that year, and the level dropped to 20%. So can you just clarify for me, lending outside of policy, is that what you would refer to as exception lending?
Yes, Deputy. The exceptions to policy is lending outside policy, as you read it there.
Would 40% be considered high?
It certainly would, Deputy, and would prompt a very close inspection as to what was driving these matters. The approach to policy in residential mortgages was, and as would be good practice today indeed, that you had policies which then had a tolerance around them, because prescriptive policies of their nature lead to a need for a certain level of exception. And to be entirely frank, Deputy, once you're moving beyond low teens, mid-teens exceptions, you have to raise a question as to the appropriateness of policy. The exceptions to policy were the subject of challenge by the Board of UBIL throughout, and to the specific item of debt service ratio policy exceptions within UBIL, and you will note on the page to which you've referred me the difference between the first active and the UBIL experience. That arose largely because the exceptions were very highly concentrated on people with higher incomes, such that the appropriate debt service requirement will not have been captured by policy, and indeed the revision to policy will have captured that. So if we find that, and I believe it to be the case when I was there, that the majority of debt service policy breaches were for high-income earners, that is a mitigant which is acceptable and will have been reflected in the policy revision subsequently. And I believe also that a very high proportion of those exceptions will have been minor exceptions, as in very marginally above the policy limits. It doesn't take from the fact, and it's very, very important, Deputy, I would agree, that where you do have exceptions arising, that they are challenged by the board, and satisfactory explanations along the lines I've given, or such other as they may be, are arrived at to ensure that credit risk appetite is being adhered to.
Thank you. That was December, or that was the end of 2006, the policy changed. But in September 2007, the Chairman is still expressing disquiet over the continued high exception rate for lending approved outside of the debt service ratio limit.
The Chairman very, very rightly, and I think it in some ways describes some of the strengths that Ulster Bank Group will have had, notwithstanding events that subsequently happened, that while we had a credit policy driven by and controlled by RBS Group, we had an independent board who saw fit to challenge these things and will have required that they receive detailed explanations as to the level of exceptions continuing. So I believe, and I'm satisfied, that the board did get satisfactory explanations to give them the assurance that while specific policy lines may have been breached, the credit appetite, or in other words, the credit risks being assumed in this lending, were within acceptable boundaries. But I would absolutely agree that it's appropriate that such exceptions be challenged on a continuing basis.